The bears keep getting squeezed over and over again each day. You can see here on the 15-minute chart for SPY, we had a big breakout back on August 8th on the 50-minute here. And this was a breakout of the previous pennant we were in. You can see the resistance here and the support. However, the funny thing is the breakout ended up turning into a fake out, and we fell back into this and then below, which if you remember in previous videos, this is characteristically a very bearish outcome when you have a big breakout and it falls lower and ends up being below. However, the only thing that can save this is if you have a gap up or you have a very strong push intraday up above the level again and it's able to reclaim, which typically ends up being more of a squeeze because this was bear bait. Bears were getting baited in to shorting this because we had a big fake out here, like I said. So they know, hey, this previously has given us a lot of profits to the downside because this shows that the strength is kind of going away. But you can see here, big gap up the following day, gap up again after that. This is the second time we had bear bait. This was a big gap up, ended up being a fake out, fell back into this pattern. You can see the resistance here and the support here. Closed on the support, which baited a lot of people in again, thinking there'd be another gap down after this because it showed weakness for the second time after this one here. But then boom, gap up above the structure we had here, this pattern, and then it was able to stay above and then just squeezed out basically all of the bears from around this time that we had there. So two huge bear bait scenarios. I like to call it bear bait. I don't know if anybody else does, but I think that's kind of like a funny way to describe it in a way. But we had two of these scenarios happen where it just led to a continuous squeeze afterwards. So this is kind of propelling us and why we're continuing higher and higher each day because you see a lot of these happen. But one thing to note with this, when you see a lot of choppy action with gaps, like we had a big gap up here, gap up over here. We also had gap downs previously around this level. One thing to note with that, if we go back to around this time of like July 12th to like July 15th range, we were seeing a lot of this choppy gap action as well here. We saw gap downs, a lot of them. We saw one right here, another one, a massive one right here, but then boom, a big gap up, another big gap up, and then straight down again, baited in a lot of bears here, and then boom, a gap up again. And this choppy action is not characteristic throughout the entire sequence of the market like all times. This tends to happen, I've noticed, before we get a very large trend change. So in this case, the trend had been at least downwards because we saw a lot of downside momentum, kind of started to trade sideways here. You ended up going down again right here. But then once it went upward, we saw a lot of big gap ups, even though the price may have been falling intraday like over here, and just continuously had a lot of gaps to the upside after this. So this kind of range right here where we saw a lot of gaps happen was the precursor to a large trend change happening, which ended up being this rally, which we are still in to this day. Kind of crazy to think it's been a month already since we did have this big trend change. So something to note here is the fact that we're seeing a lot of these similar back and forth price action with gaps. It's kind of defeating both the bears and the bulls. A lot of the bulls kind of think, oh, well, I need to get out of this because this is a big fake out or a fake out over here. Opposite for bears, they're trying to short this to go to the downside, and basically it's just continuing higher because of all those people trying to short this. So something, again, to note, does it have to mean that there's going to be a trend change immediately? No. You guys all know that I am bearish for the fall months. My thesis for it and everything and my trade for it is separate from my work here at Cheddarflow, so I'm not going to explain everything in the thesis on there. You guys choose to do what you want with the information I provided. But in terms of the short term right now, I'm just giving you the analysis on what I see technically here. Going over to the application on Cheddarflow, you can see here, our friends, the big bears here, the big money, has continuously had to roll this strike for their positions. You can see here, this is 11 million in premium for these 404 strike. Before, and last week it was 397, it turned to 399, and now it's 404 for these 1021 expirations, which is also another big change because previously we'd had a lot of 916 expirations for September. They changed these to October, so they keep pushing back the expiration. Whatever event or whatever thesis they have, technically, whatever they think is going to happen eventually, they had to push back the time of because they keep losing and it keeps going up because we've seen this massive squeeze. So they definitely have been taking losses in this past month. Nobody's perfect in the market. They have been right characteristically for most of the year. Like if we go here on the daily chart of SPY, they were starting to do this back in like January, February-ish. And look at, they've just been able to nail all of these downside moves until July when we had this big squeeze here and they started to get squeezed out. But I would assume that they're up on the year for sure because they've been shorting all of the rallies. So they're just keeping with whatever they're doing right now. And if it's working for them, then cool. As of now, has been kind of off, but we are seeing them still come through. So they haven't given up on it yet. They just push back the dates and have to push back the strikes. So something to note in terms of that. Next thing I want to go over is the dark pools. We haven't seen anything too crazy yet. Again, I've mentioned in previous videos, we saw a massive $9.3 billion signature print on SPY back here in the dark pools. There's around, I think it was April 1st, roughly April 1st or April 4th, we saw it. And then this massive move to the downside happened after. It was like 1,000 points on SPX that happened after that hit. So back up here where this arrow just continuous downside after. So I'm personally looking for stuff like that. I want to see them unloading. That would be pretty obvious in my opinion that they'd be unloading once we saw a print like that. But we've only been seeing a lot of these at least over 1 billion each day, but nothing over 3 billion. So 1.8 billion on Friday. If we go back to the 11th of August, to the previous day, nothing crazy on here, only 560. That's literally nothing comparatively to what we've seen before. On this day, 2.5 billion. That's probably the biggest of the week that we saw on Wednesday. So at the 411.28 level. So nothing too crazy, but definitely there is a lot that we're still seeing. It's kind of like mid-range in terms of the premium we've seen for dark pool, but nothing super eye-opening except for Apple. We've actually seen a lot of dark pool prints. 363 isn't too much, 363 million. If we go back to, I think it was Thursday. No, it wasn't Thursday. It was Tuesday. Tuesday we had we had 377 here. If we go to Monday, you can see here we had a $1.5 billion dark pool print on Apple. This is very large for Apple. This is not like SPY. This is much different because it's an individual ticker. If you see 1.5 billion worth of premium on an individual ticker, that is very, very significant, even if it's such a big stock like Apple. So if you go to Apple's chart right here, this is very big. I marked it personally on mine. It was like around, where was it? I have another chart for it, but it was at 166. So roughly up here. So we saw a big print at 166, 161. We also saw a $1 billion print. So personally, in my opinion, I think that they are selling on the way up, or at least trimming long positions. Now, we don't know if it's a buy or sell in the dark pools, but again, we've been rallying since all the way at June 17th. This thing has been going straight up since June 17th. That is already 2 months straight of rallying for Apple. So you'd think it'd be pretty crazy if we did see a lot of buys up here. It could be, who knows? But in my opinion, with the data we are provided with dark pools, I personally believe that they are selling around this range, and we may see weakness going forward, whether that be this month or next month in September. So something to note, especially if we continue to see prints like this, that'd be a very early indicator sign that we could start to see consolidation, the potential fallback, or at least a pullback to some degree. So continue to watch that. Another thing I do want to talk about is VIX here. So VIX is actually right below the demand level we had previously. Closed the daily below here. This thing has been getting hammered lately after it fell off from around 35. Just continuous downside with the strength in the markets. So this one I've continued to watch, especially if we have a gap up or break above this 22 level in the future. This will be a big sign, and this will probably be the deciding factor of if downside on SPY, such as a pullback, is just a pullback, or if it's actually a very large move to the downside on SPY. Because if we go to VIX again, this break above this level, this would act as some form of bear bait, because this is the first time we're below this level since it started, or the trend line, you see the blue trend line here, since it started on November 5th of 2021. This is the first time we're below. So it does gap up and is able to hold above and break above here. That'd be very big, and that's probably when we see this thing really start to go at least up to 35 again, because it was a fake out to the downside kind of. So something to note. It can be a little bit more challenging to chart VIX because it's not the same as like an individual ticker, but I still chart it. It's worked well. You can see here we had one and then two major taps of this line. You also had another tap as a support here, but then it fell below after. And also 35, very key resistance. You can see characteristically 1, 2, 3, 4, 5, 6 times we had this as a resistance. So it's a little bit more difficult to chart VIX, but you can see similarities here. 6 times on 35, you know this is a hard resistance. So something to note there. And then also one more thing here is Google. I've been watching this one because it's very bearish in terms of this rally. This rally has been very strong, like on Apple, as I showed you, on SPY, as I showed you, but Google has been very weak, and we're in a bear flag right now. So a very interesting thing is this is the first time on the daily candle we actually broke above this bear flag. So it's going to be interesting if it can hold above, because if it can hold above this level, especially another weekly candle for this week, but ideally at least another day above, that'd be big, because I'm sure a lot of people are short on this because it's showing a lot of relative weakness to this rally. So there could start up a little bit more strength going forward. I personally believe, though, that this is going to end up being a fake out and we'll fall back into it, but I have to play both sides. Just look at price action, see what happens with it. Again, we are above, so just from a technical standpoint, this would be bullish, but we'll see on Monday if there's a gap down back below into it, then that would be bearish. So again, something to note here on this ticker, but otherwise, appreciate you guys watching this video today, and I will see you guys in the Wednesday video, which will be about dark pools this week.